Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and every Friday at 8 a.m. Central Standard Time, I share my top 5 dividend stocks of the week with my subscribers. Now, you might be wondering, what makes my list so special? Well, I begin my research for this series using a list of dividend stocks that have ex-dividend dates of this coming week. In this case, that's April 15th through April 19th, because it's the first list I thought of in the dividend space that changes weekly, and it creates some urgency to watch my videos. From there, I use my select criteria handpicked with consistency, stability, and returns in mind to help me narrow down that list a little bit further. And the final thing that makes this list, this series, this video different from any other that you'll see on YouTube is, well, me. I'm pretty cool.
Guess we all should have seen that coming.
Now, before we go any further, I want to quickly explain what the goal of this series is and is not. The goal of this series is to provide my subscribers with a source of dependable and quality dividend stock information to be used as a springboard into your own research. The goal of this series is not for the information in this video to be used as financial advice or a reason for you to blindly follow a YouTuber and take these videos as stock suggestions without doing your own due diligence first. Now, if you agree to use these videos for their intended purpose, feel free to subscribe and ring the bell so you get notified when these videos and my other dividend related content goes live. And while you're down there, click on that thumbs up button to help me continue to grow the channel. With all that out of the way, let's find out which stocks are my 5 favorites. Leading off this week's list and coming in at number 5 is a company we're all familiar with. Say hello to WD-40 Company, stock ticker WDFC. WDFC is a quarterly payer in the consumer staples sector, paying $3.52 per share per year with a forward dividend yield of 1.4%. WDFC has been paying and growing their dividend over the last 15 years. They have a 3-year dividend growth rate of 7.94%, a 5-year dividend growth rate of 8.61%, and a payout ratio a little bit higher than I like at 60.14%. At the time of recording, WD-40 was trading 9.95% off of its 52-week high. It has an ex-dividend date of April 18th with a payout date of April 30th. And for those of you unfamiliar, this chart right here is going to show you the value of $10,000 invested into each individual company versus the S&P 500 over the course of a period of time, in this case, 10 years, with and without the dividends reinvested. So up here at the top, you can see WDFC 10 years ago, $10,000 invested would have brought back $38,576.12. That's compared to the S&P 500 in the same time frame with the same parameters, bringing back $33,687.48, which is a difference of $4,888.64 on the side of WD-40. And down here at the bottom, it's the same thing, but this chart is without dividends reinvested. WDFC turned into $36,057.30, whereas the S&P brought back $31,012.68. That's a difference of $5,044.62 on the side of WD-40 Company. And the difference between reinvesting the dividends and not reinvesting the dividends in your total return with WD-40 Company over the past 10 years would have been $2,518.82. Next up, number 4 on this week's list is McGrath RentCorp, stock ticker MGRC. MGRC is a quarterly payer in the industrial sector, paying $1.90 per share per year with a forward dividend yield of 1.58%. MGRC has been paying and growing its dividend over the last 32 years. They have a 3-year dividend growth rate of 3.46% and a 5-year dividend growth rate of 6.47%, and their payout ratio is 30.97%. At the time of recording, McGrath RentCorp was trading 7.95% off of its 52-week high. It has an ex-dividend date of April 15th with a payout date of April 30th. And again, we got the same chart here. MGRC at the top with dividends reinvested would have brought back $46,350.07 compared again to that $33,687.48 from the S&P 500. That's a difference of $12,662.59 on the side of MGRC. And down here at the bottom, without the dividends being reinvested, MGRC still outperformed the S&P 500, but this time by $8,794.51, and the difference between reinvesting the dividends and not reinvesting the dividends in MGRC is $6,542.88. First up on the podium this week and coming in at number 3 is Alamo Group, stock ticker ALG. ALG is a quarterly payer in the industrial sector, paying $1.04 per share per year with a forward dividend yield of 0.48%. ALG has been paying and growing its dividend over the last decade. They have a 3-year dividend growth rate of 20.19%, a 5-year dividend growth rate of 15.38%, and a payout ratio of just 7.62%. At the time of recording, Alamo Group was trading 5.53% off of its 52-week high. It has an ex-dividend date of April 15th with a payout date of April 29th. And again, looking at the returns of ALG over the past 10 years, this time with the dividends reinvested, that would outperform the S&P 500 by $8,909.13 over the past 10 years. The difference of ALG versus SPY over the past 10 years without the dividends reinvested actually would have been more at $10,383.01. And the difference between reinvesting the dividends into ALG and not reinvesting those dividends would have been $1,200.92. And now we're a little bit over halfway through this week's list. It's a great time to remember to click that like button if you guys haven't already, as it really helps me continue to grow the channel. And also, I'm really curious. Let me know if you guys own any of the 5 stocks mentioned in today's video down in the comments below and how they're doing for you. I look forward to reading and responding to each of those responses, but now let's get to the top 2 stocks. The runner-up on this week's list, coming in at number 2, is Zoetis, stock ticker ZTS. ZTS is a quarterly payer in the healthcare sector, paying $1.73 per share per year with a forward dividend yield of 1.04%. ZTS has been paying and growing that dividend over the last 12 years. They have a 3-year dividend growth rate of 22.36%, a 5-year dividend growth rate of 23.5%, and a payout ratio of 26.66%. At the time of recording, Zoetis was trading 17.86% off of its 52-week high. It has an ex-dividend date of April 18th with a payout date of June 4th. And that $10,000 investment into ZTS 10 years ago, while only reinvesting dividends since then, would have brought back $61,331.43, which is $27,643.95 more than the S&P 500, whereas the $10,000 investment without dividends reinvested would have outperformed the S&P 500 by $28,650.76, and the difference between reinvesting those dividends and not reinvesting the dividends was $1,667.99. And the moment you've all been waiting for, number 1 on this week's list is Williams-Sonoma, stock ticker WSM. WSM is a quarterly payer in the consumer discretionary sector, paying $4.52 per share per year with a forward dividend yield of 1.46%. WSM has been paying and growing its dividend for the last 18 years. They have a 3-year dividend growth rate of 21.25%, a 5-year dividend growth rate of 15.92%, and a payout ratio of 24.23%. At the time of recording, Williams-Sonoma was trading 3.24% off of its 52-week high. It has an ex-dividend date of April 18th with a payout date of May 24th. And again, we have that one-time lump sum $10,000 investment into WSM 10 years ago while only reinvesting the dividends since then. That would have turned into $61,639.17, which outperforms the S&P 500 by $27,951.69, whereas the same $10,000 investment, this time without reinvesting dividends, would have brought back a still impressive $51,350.11. This outperforms the S&P 500 by $20,337.43. The difference in reinvesting your dividends with Williams-Sonoma and not reinvesting your dividends with Williams-Sonoma would have been $10,289.06. And just like that, you just saw my top 5 dividend stocks of the week for the week of April 15th through April 19th. If you're seeing this video after the dates I just mentioned, remember to subscribe and ring the bell and tune in every Friday at 8 a.m. Central Standard Time. With that being said, if you are seeing this video after those dates mentioned, it's not too late. You guys can still use this video as a good source of quality stock information and do your own research to see if they fit your goals and your needs.
I need my money. I need my money. I need my money right now.
I really hope you guys enjoyed yourself in today's video. And remember, if you guys own any of these 5 stocks, let me know which ones and how they're doing for you down in the comments. But until next time, see ya.